This video is going to be the easiest and the fastest explanation of a Fibonacci retracement so you can improve your trading using it. It doesn't matter in what market you're using it in. You can use it in Forex, crypto, futures, stocks, doesn't matter. This is the most powerful tool that I use in my strategy. Okay, so now that we're on the charts, the first thing that you're going to want to do is you're going to want to go here to your left-hand side and click this right over here. It's going to say Gann and Fibonacci tools. Stretch that out and click this Fib retracement. Put a star next to it so it pops up right into your favorites toolbar. Now you're going to go ahead and click this and you're going to stretch it out. Once you stretch it out, you're going to want to double click it. You're going to want to make sure that your settings are exactly like this. So screenshot it so you guys can do this a little bit later in the video. So now the first thing that you're going to want to know when you're looking at a Fibonacci is what it actually does. A Fibonacci is just measuring the pullbacks of a trend. So you can only use it when the market is trending. So whenever the market is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, you can go ahead and grab that Fibonacci retracement tool and you're going to want to draw it from the first push to the end of the move, which is right here. So from point A to point B, and then it's going to find C. Notice how it lines up perfectly with the Fibonacci tool. So then you're going to want to draw it from your next impulse. So from this impulse, which is right over here, to point B, which is right over here, and then you're going to want to see where it's measuring that pullback. Each of these levels that I have drawn on my Fibonacci tool have a meaning. So here you're gonna have the 5618. This is your prime entry point. This is your golden zone in between the 50 and the 618. If price comes up from point A to point B and comes back to your golden zone, this is a perfect entry zone right here. These are your targets. You can even use your 0% as your target as well. So any of these three zones here are going to be used as targets. Then you have your 236 and 382. Once you come down and maybe retrace to this zone here, this is indication of a strong trend to the upside. Whenever we do bounce off the 236 or the 382, I'm looking for entries above the 0%. I'm not looking to take a bounce off the 236 or the 382. I'm just looking for a breakout trade at that point using the 236 and the 382 as confluence. If you pull back into this zone, this is your last resort. If you start to break this area here, your Fibonacci is invalid at that point. You don't want to be drawing a Fibonacci because if you do start to break your 764, you're most likely just going to get a reversal of that trend. So in the markets, you're going to see similar scenarios. So in this scenario here, we're going down. So you're going to have lower lows and lower highs. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. This is the scenario that you're going to want to use a Fibonacci tool. So in this scenario, I'm going to go ahead and backtest a Fibonacci retracement setup. Okay, so first thing that you're going to want to do is always draw out your zones. We have this zone here. We have this zone here as well. So at this point, price started to change of structure here. We failed to break highs and we started to create new low, lower high, lower low. Now we get that big push. Okay, so now I'm expecting a Fibonacci pullback and I'm going to draw it from point A to B to the downside because it's a bearish market structure. If the markets are bullish, I'm drawing a Fibonacci tool from the bottom to the top. And if the markets are bearish, I'm drawing a Fibonacci tool from the top to the bottom. So in this scenario over here, we're creating new lows, lower highs, new lows, lower highs. So I'm drawing my Fibonacci tool from this point here to this point here. So from point A to point B and just waiting for a pullback. Okay, I'm starting to get my 5618. Right there, we start to get confirmation. Why do we get confirmation? Because we have this area over here that's being respected. We have tap, 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 tap. So I'm expecting price to hold over here. So I'll go ahead and look to execute right here. Stop loss will go above the 764 and then I'm looking to create a new low. So I'm using that target zone, which is the 0%, or you guys can look to target this area over here. For me personally, just want to go back to that 0% and then we'll see if we win this trade. And as you guys can see, price actually gave us that beautiful, beautiful push to that area. Now price started to give us another Fibonacci sequence over here. So price came down, pulled back, and this is also a small Fibonacci. So let me go ahead and delete this one here. We have a new low that was created. So after a new low gets created, we can go ahead and draw a Fibonacci tool from this point to this point, and we get the 382. So in this scenario, I would actually look to take a trade based off a breakout, which would be right over here with stop loss above this structure to push down. But now we have a deeper retracement. We created a new low, so we're grabbing point A, we're moving point A to right here, and then we're looking to draw point B over here. So now we're waiting for a pullback. 382 starts to get rejections, right? So how do we execute off of 382? We would need to wait for our lows here to break using that 382 as confluence. All right, broke right there. We would have executed right there. Stop loss would have gone above this structure point here. And then we're looking just to catch a 1-to-2 risk to reward ratio. And just like that, you guys can win that trade as well. Now we're going to go ahead and potentially get another pullback of this trend over here. Since we created a new low, we can go ahead and grab point A, move point A to here, then grab point B, move it right there. And now we're waiting for a pullback. If price continues to drop, we will continue to move our Fibonacci tool lower. So it dropped again, move it lower. We're waiting for a pullback to any of these areas. Pullback, move it lower. Okay, we're starting to get a pullback into the range. Almost a 56.8 rejection. We get that rejection, also rejecting a area of interest here, and you get your confirmations coming from that area. So you probably would have been in somewhere over here. Stop loss above this structure point here, and you're looking to target your 0% here. Eventually should come down and you hit overall targets. Now, one thing that I want to make sure that you guys understand is when you guys are drawing a Fibonacci tool, you cannot draw it in a ranging market. This will completely invalidate any Fibonacci retracements that you are looking for. Why? Because price is going to come up, you're going to draw your Fibonacci tool from here to here, and then you're going to be waiting for a pullback and waiting for a reaction at this level here, and you might execute and then price comes all the way down. So you really want to wait for those reactions to come off that area and then confirmations to come after, so the market can then look like this. If the market is ranging, do not use a Fibonacci. If the market is trending, a Fibonacci tool will help you make a lot of money. And if you guys want to know the 10 scalping rules that completely changed my trading forever, click this video right over here and you guys will learn all about that. If you guys enjoyed this video and like the way that I teach, make sure you guys subscribe to the channel and make sure you guys leave a like. I really appreciate you guys for watching. Peace out.